to RANsquawk's e-morning briefing for Wednesday, the 26th of August 2009. Let's take a recap now, having headed through 9 o'clock in London of the major events and overnight news. We've just seen one of the most important figure releases from the Eurozone coming out of Germany. That was the German IFO reports. The business climate for August did come in slightly better than analysts' expectations, a headline of 90.5 against the expected 89. With the constituents' current assessment was pretty much in line. Expectations were also slightly better. We did briefly see a rally in stock futures in Europe. However, they were quickly pared back following the comments that were actually made out of the IFO economists. IFO's NERB said the ECB should keep rates lower. His colleague Erbinger saying that rates of 1% were appropriate. NERB saying it's too early for the ECB to raise rates, and the ECB shouldn't raise rates until mid-2010. So pretty much going against what the general consensus has been in the market, and too early to discuss exit strategies, and sees no risk of inflation according to NERB. Consequently, we've seen the European stock futures, which were broadly flat heading into the figure. After taking a brief lift on the headline, the preceding comments have seen equities move lower and put a bid into fixed income products. The Bund future now trading higher in the wake of those comments. So just taking a bit of a recap then in terms of the actual overnight press, starting with a few things in Asia. We did see a positive move in the Asian equity markets, with the Nikkei finishing higher and the Shanghai Composite finishing up over 1%. Also noting out of China specific news flow, China's economic growth may exceed 10% in the first quarter of next year, with monetary policy likely to remain loose in the near term to support the economic recovery. That was according to a government researcher and Deputy Director of the Development Research Centre. Elsewhere in European headlines, comments out of German Finance Minister Steinbrück said that Germany will intervene to prevent a credit crunch should firms' access to loans become a problem. Elsewhere, just a quick look in the FX markets related to dollar news flow. We've seen the S&P chief economist overnight say the dollar role in world reserve will decline, but will stay the biggest reserve currency for the time being. He expects the dollar weakness and said dollar may fall to 70% of reserves versus the current 90%. Elsewhere, in terms of what we have seen so far this morning, before the IFO, euro obviously now moving a little weaker, we have seen euro sterling earlier in the morning hit and 2.5-month high. There's been some talk of month-end demand out of a Eurozone central bank. Also, cable did briefly test the 163 handle this morning to the downside, where we did see quite a significant bounce of around 50 pips on touted Asian central bank buying. So just taking a look in terms of other news flow coming out of the UK, some comments late yesterday evening from Bank of England. The Governor, or Deputy Governor Charlie Bean, said that bond purchases transmission lag might be quite long. He says the gilt yields 50 to 75 basis points lower than otherwise on APF, and calls the UK asset purchase response moderately encouraging. In terms of equity markets, as just said, we are moving a little lower in the wake of those IFO comments out of especially NERB. We have a couple of individual stock news that's worth noting. WPP and the FTSE, we're currently down a couple of percent there after they reported first half net income £108.4 million, below the expenses of 179. Elsewhere, Suez Environment in the CAC, they're faring a little bit better. That was after their first half nets came in 175 million, above the expected 148. Just taking a look then in terms of the actual scheduled events that are left to come now. Midday we'll see the US MBA mortgage application data. We'll see durable goods report at 1:30 from the US. The first of the German state CPIs we'll see today, North Rhine-Westphalia, due at 2 o'clock London time. They'll be followed an hour later by the new home sales report from the US, and then the oil inventory levels due an hour after. Elsewhere, other things we're looking out for, we'll see the third of the week's Bank of England reverse auctions. At the moment we are seeing some moderate outperformance in gilt futures. They'll be buying back 2013 to 2019 maturities today. We'll also get a Fed outright Treasury coupon purchase of 2026 to 2039 durations. Allied to the second of the major US auctions of this week will be the 5-year note of $39 billion worth. Usual time results for that, 6 o'clock London, so 12 in Chicago.